Okay, we're live. What's going on, my fellow business owners? Welcome to another episode from the Lone Assassin, where we provide you tools, training, and resources to grow your business, all different kinds of things, talking about funding, business growth strategies, real estate, all that good stuff. And today, we're joined by Jose again from BDA Solutions, and we're going to be breaking down the primary qualifications for getting a BLOC or business line of credit. It's a very popular form of financing, a really important form of financing for you to have as a business owner. But we found that there's a lot of myths, a lot of misunderstandings about what it takes to actually get a business line of credit. Like, just because you're in business and you're making some revenue doesn't mean you automatically qualify for a business line of credit. We're also going to talk about the difference between different forms of business credit, like business credit cards. Sometimes those are often confused with business lines of credit. So we're going to break all of that down so you know exactly what you need to do, what you need to get together, what you need to work towards in order to qualify for a business line of credit so you can use that to grow your business. So only ask as usual, if you guys find the video helpful, just hit that like button. Any specific comments, questions, feedback, go ahead and drop them down in the comment section. We always appreciate that. If you have specific questions about getting a business line of credit or whatever. And then also make sure you take advantage of the free strategy calls that Jose offers at his company, whether you're doing trying to get a business line of credit, if you have a real estate deal you're looking to get financing for, whatever that is, make sure you click on the link in the description and take advantage of that. Have a conversation with Jose and his team. So with that said, Jose, really appreciate you being here as usual. How you doing today?
Good, Matt. Thank you again for the invitation. I appreciate the opportunity to again kind of lead the industry, lead our clients with information and in as valuable information up front first, as opposed to us trying to push a particular idea or business theory down their throats.
Right.
We like to present with information first, and then they make the decision based off of what we have at our disposal. So
Sure.
yeah,
Sure.
I appreciate the opportunity, and hopefully people take a couple things from this discussion and apply it and help them get a better understanding of what the business commercial financing landscape actually looks like.
Sure. Yeah, sounds good. And before we went live, I already learned two new things from you. Just having just discussing how this training was going to go. I already started learning stuff, so I can't imagine that the audience won't. What I wanted to start with, let's start kind of at a 30,000 foot view here, and talk to me about the primary qualifications for a business line of credit. And then you mentioned that one of the biggest reasons that people don't get their business line of credit is maybe they apply too early. They just haven't been in business long enough. So can you talk about those?
Yeah,
And we'll start
absolutely.
from that.
Absolutely. So yeah, the business line of credit is far and away the most popular type of financing that most businesses want to go after, because a business line of credit is something that is always available to them as long as they're able to pay it down. If you were able to get a business term loan, you will get an immediate cash injection. And once you use that capital, the capital is gone. You have to pay that back, but you no longer have access as you pay back the loan. Business lines of credit allow you to use the capital, pay it back, but that revolving line of credit will always be there for you as long as you remain compliant with the terms and conditions. So there are a couple of vehicles that many people believe are business lines of credit. They're really not. As you mentioned, before we jumped on air, there are a lot of advertisements going on Instagram, on Facebook, social media in general, saying, "Hey, I can get you into a business line of credit for 0% financing for up to
Right.
18 months."
Right.
Well,
I see that all.
technically, yeah, technically they're not wrong. There is a business credit component to what they are trying to push, but it is not the traditional revolving business line of credit. What
Mhm.
they're actually pushing for are business credit cards, which
Right.
have their perks. It's not tied to your personal debt. It is not based off of revenue. It is not, you don't have to give up any equity in your business in order to qualify for those. However, the entire amount of whatever they're, trying to sell, for example, $150,000 is not going to come from one source. It's
Right.
going to come from multiple sources that, when they accumulate together, will add up to
Right. You're stacking
$150,000.
credit cards.
Exactly. That's really all you're doing. And again, I'm not shooting on that. That is a great product to start with, especially at, at the beginning stages of your business. Who can shoot on 0% interest, regardless of the vehicle that you need to obtain?
Sure.
Now,
And it's
there,
better than like if you, at that point, if you, like you said, if you're just getting started, you can't get the business line of credit. It's certainly better than having access to nothing, right? It's a good way
exactly.
to
And
get
not only
started.
that, a lot of people tend to shy away from using that product because they assume that they can only take those credit cards to stores where they can swipe the cards, and if they don't have a business need to do a commercial interaction, then they don't use the credit cards. That's not necessarily true. As brokers, we also give resources to our clients to help them liquidate those credit cards so that they actually have a cash value in their bank account, and they can go out and use those for whatever business reason that they need. So,
Nice.
there are some pros and cons to it. But there's also the myth of business credit, which business credit is establishing your entity in a particular manner and signing up with very specific vendors in a very specific format in order for those trade lines that you open with the vendors, that they report to your Dun and Bradstreet number. And then
Right.
that in turn builds your Paydex score. The Paydex score is something that you can then utilize in the future to open up possible non-personal guaranteed business use credit lines in the future. That's a
Right.
possibility. But that is an entirely separate process from even getting stacked business cards or applying ultimately for this revolving business line of credit.
Right.
So in short, in order for you to get, generally speaking, with most of our lenders, for you to qualify for a traditional revolving business line of credit, the first thing that they're going to ask is, how long has this company been in business? If you do not have at least 2 years, or I'm sorry, 18 months is when they will start to open the possibility of you qualifying for it. So if you have not been in business for at least 18 months, then you flat out will not qualify for a revolving business line of credit.
See, I didn't know it was that long.
Yeah.
Are there any exceptions to that rule? So regardless of revenue or maybe personal credit, whatever,
Yeah.
there's no.
So in order for us to get a business line of credit, and now I'm also talking with the goggles on of my top tiered lender. There are, I'm very sure, other lenders that are probably more in the subprime market than they are, the top tiered market,
Mhm.
that will offer you as a business owner a revolving line of credit. But just because they have that product available, I encourage people to do a little bit more digging, because that business line of credit may only be available to you for a certain length of time. They may
Mm.
only give it to you for 6 months. And if
Because
you
it's
accept,
subprime.
because it's subprime,
I got
and
you.
because you accept the 6 month a tenure on that line of credit, initially, as you accept the terms, you may have to draw 90% of that approved trade line immediately. And if you
Okay.
don't pay it all back within that 6 month period, you start running into fees and all kinds of other things. So
So
just
basically, read
because
the
the
fine print.
vehicles are there, yes,
Know
definitely.
what you're getting into. know the terms and
Please
conditions.
double check
So
that.
when you hear somebody saying you can get a genuine business line of credit regardless of how long you've been in business, maybe that could be a good thing. Those things serve their purpose, but make sure you know exactly what you're getting into in that case, because that's not usually the case. What's the old cliche? If it sounds too good to be true, a lot of the times that it is. You don't want to be handcuffed by the terms and conditions, not knowing what those are.
Right, right. One of the things that as a business owner, if I'm approached by a broker or a lender and saying, "Hey, regardless of how much time you've been in business, I can get you a business line of credit." The number one question that I would ask, and that would help me determine whether it's a traditional revolving line of credit or whether they're leaning more towards the business credit card stacking, is, am I going to get this line of credit from one source?
Hmm.
If they say no, chances are they're stacking credit cards.
Right.
If they say yes, then at that point, maybe start asking a little bit more about, credit qualifications, draw amounts. Are there going to be draw fees?
Right.
How long am I going to have access to the capital? Things of
Right.
that nature. But that
Okay.
no, that first question I would ask is it coming from one source or is it coming from multiple sources?
I got you. So let's go back to the traditional type of business line of credit where it takes 18 months on average to get approved. At what point does the bank look like start that time frame? Is it when you register an entity? Is it when you get an EIN number? Is it when you open a business bank account? How do they determine when you actually started the business?
So the 18 months it actually starts when you first started business.
What does
So
that mean though?
that
Like
means
you
the
started
first time you
taking
actually
rev.
started generating revenue.
Okay, so
So
technically, like the very first sale you make, even if you don't have an entity or a business bank account, the first sale you make within that business is the beginning of that timestamp.
that timestamp begins when you make the first revenue within the established entity that they are looking at. So if you had, for example, another big component of all of these myths is buying a shelf corporation. If you
Right,
have a shelf corporation that's been in existence for 10 years but has not generated any revenue, they haven't produced any tax documents, they haven't done any of that. From the lender's perspective, it's a brand new business.
right. Okay,
So
that makes
if
sense.
if you were to buy, for example, a shelf corporation, and it goes back to like 1985, but you as the business owner can then produce documents saying I started my revenue generation in September of 2020. The lender is going to go back to September of 2020 and benchmark that as the beginning of the business, regardless of the age of the corporation.
Okay, so you do need to have an entity, and you
Yes,
need whatever date that entity makes its first sale. That's when the bank will officially consider you in business,
correct,
right?
correct. If you
Okay.
cannot produce a bank statement going back to the age of inception or the age of when the business began, then to simplify it, if you can't produce until you can produce a bank statement for that business, then the age begins once you can produce a
That's
valid business
really
bank statement.
important to know because a lot of people think they're technically in business. You could be generating revenue for a couple of years and maybe, I mean, it took me, I was one of those business owners where, I didn't worry about the legal entity or whatnot. I was just focused on generating revenue. And so I would say that I started my business years ago. But if I were to go try and get a business line of credit to expand, the bank would be like, well, no, because you didn't actually set up your entity and set things up correctly. So none of that really counts towards the qualification of getting the
Right,
business line of credit.
right.
So what I would end on that specific note, guys, is if you don't have your entity yet, set it up, and it's really easy to do. I like inkfile.com. They'll actually set up your entity for free. They have an option to do that. You just pay the state fees, and they'll be your registered agent for free for an entire year. So, they say that the best time to plant a tree was 30 years ago, but the next best time to do it is today.
Right
You got
now.
to get it
Yep.
done today, like soon, if you plan on getting a business line of credit. So yeah, I think that's a really important thing to know. I had no idea that that was actually the case. That like you have to have the entity that's generating revenue. It's not just how long you've been making sales. Like you have to have the entity as well.
Right, right. So a lot of you professional freelancers that may be operating under a sole proprietorship, keep in mind, even though you have been generating business revenue for years, and you're possibly looking into getting one of these more appealing financing vehicles, the fact that you are a sole proprietorship and you don't have an official entity set up, that is going to eliminate a lot of the financing vehicles that we may have at our disposal,
Right.
just because you're operating under the proprietorship as opposed to an LLC, or some other type of either S corp or C corp.
Right. Makes sense. Really good to know. All right. Are there some other qualifications that you want to dive into? So we've got time in business. Are there some other qualifications we should dive into?
Yeah. So again, every single a type of financing that you're going to be uh, approaching or trying to qualify for is going to have different benchmarks that you're going to have to meet in order to qualify for that financing. So, with regards to the traditional revolving line of credit for a business, outside of the tenure, the 18-month tenure that a lender will begin to look at you, you also have to have minimum credit requirements as a business owner. For my particular lender, the one that I'm talking about, you need to have at least a 600 FICO score. Now, just because you have a 600 FICO score does not mean you automatically qualify.
Right.
Every single file is different depending on the depth of your credit profile, the age of your credit profile, the complexity of your credit profile. It's more than just the number, and we've touched on that a couple of podcasts ago, where
Yep.
there's a lot more involved than just the number. So outside of the FICO, you then have to qualify for their revenue um, minimums. A lot of them are looking for a business line of credit. Keep in mind, from the lender's perspective, it is a much more um, it's a higher risk factor for you to extend a revolving line of credit to a client. So many of my lenders, if you want a revolving line of credit, you better be hitting at least $40,000 in monthly gross revenue every single month before they'll even consider you. If you're
Mm.
not hitting that number, I'm not saying that there is absolutely no chance. I'm just saying be prepared for some of the other asterisks, that if we do get you approved, it's going to come with additional terms,
Right.
different
Strings
repayment
attached.
structures, strings attached,
Yeah.
because you don't meet these minimum qualifications for the lender.
And what would that minimum revenue? So if they have 40,000 a month gross, what does that typically translate into as far as a line of credit?
So
What would they get?
at 40,000 gross, you're probably looking at a percentage of your overall gross revenue. So
On a monthly basis
on
or
a
annual?
on an annual basis.
Annual. Okay.
So yeah, let's say that 40,000 probably comes out to about 480,000, if I'm doing my math in my
Yeah.
head
480
properly.
for you.
480,000 a year. So you will probably get about 250,000
Okay.
in available revolving credit if all
That's
of
good.
the other T's are crossed and I's dotted.
Sure. Okay. All right. Monthly revenue, 40,000 per month. Obviously, every lender is going to be a little bit different. And
Right.
if they do approve lower than that, again, just know the terms and conditions and what you're getting into. Um, so we talked about FICO scores and credit depth, monthly gross revenue. What else do we have?
And it obviously, again, kind of going back to the business tenure. That's really the force, and also the industry. Keep in mind that not all industries are going to qualify, even if you're a slam dunk in some of these three different categories of tenure, credit, and revenue. If you're in a restricted industry, again, it goes back to how is your entity registered. If you're a used car dealer, if you're a dispensary for marijuana, the adult industry, those anything having to do with, unfortunately, with guns, they're red flagged. So
Right.
regardless of your performance, you're not going to get that type of financing.
Okay.
So if that's you, sit down with an attorney, sit down with a tax consultant, and try to figure out, okay, how can we get around this? Because I need to grow, I need to scale, but the bank says no because of this factor. How do we, strategically get around that caveat?
I got you. So really the three main categories would be: one, assuming you're not in a red flagged industry, but the time in business, your gross monthly revenue, and your personal credit.
Personal credit.
All those things are going to play a factor in getting this business line of credit, what the terms and conditions are going to be, and then how much you get access to.
Exactly.
So then let's say you got a new business owner, or maybe somebody like me who was in business, quote unquote, in business for a little while, but didn't file that entity for let's say 6 months ago, right? We talked about business credit cards already. Would you say that those, starting with that, is one of the better alternatives for someone just getting started, or are there other alternatives you would recommend? Because the reason I'm asking is because just because someone can't get qualified for the business line of credit doesn't mean they should give up on getting the financing they need to grow,
Right.
for whatever that is.
Right.
So, what would you suggest as some alternatives? Maybe business credit cards are the better ones, but what would you recommend in that scenario?
So depending on the full landscape of every person's situation, generally speaking, I think the business credit card stacking program it can work wonders if it's utilized properly. Again, we'll be able to help you liquidate those cards. The other aspect of it is the 0% financing, and then being able to leverage business credit that does not come back and bite you as the business owner in the rear end, because that debt does not report to your personal credit. So if you had a credit card as a owner and it was a personal credit card and you needed it for a business expense, maxing out that credit card is going to take a ding on your credit. Doing that under the business credit card program will not have an effect on your credit unless you default. So those are some of the perks as a startup, as someone who is in the pre-revenue stage. It is by far the easiest form of capital to be able to raise for those exact same reasons. The other aspect of it is that you're not giving up equity in your business. You aren't putting any type of encumbrances on your business, so it's as free as you can be. There are a couple things you're gonna have to dodge and weave to be able to get access to the capital, but it's
Hmm.
definitely not something that you could not work your way around, especially as a new business owner needing to scale, needing to hire, needing to get more equipment, things of that nature. You can definitely find a way to work your way around that.
I got you. And so with business credit cards, obviously with that strategy, the personal credit score is going to play a huge factor in that, determining whether they're qualified or how much they get qualified, right? And what do you find that, like, the minimum FICO score for something like a business credit card stack? What do they typically need for that?
So for that, the business credit card program, typically we do need a strong credit profile to be able to leverage and go out and get qualified for those business credit cards.
Yeah.
Minimum credit score we can work with a score as low as a 680. But again, it's more than just a number. That
Right.
individual has to have at least 3 to 5 different types of trade lines that they're already reporting to their personal credit.
Right.
Some of those have to be open for at least 5 years. So it again, it's more, and then also utilization. If they have high utilization on the existing credit lines that they have open, we're not going to be able to get you approved.
Right. That makes sense.
So the other component of that is revenue. How much reported income is that individual reporting on a yearly basis? We like to work with clients that have at least 45,000 in verifiable income and that 680 strong credit profile. If you have a co-signer that meets that criteria, they can also step in and co-sign for you, and we can use their credit to obtain the business credit cards and get you up and going.
Gotcha. So, I mean, the key takeaways for me on this is one, get your entity set up as quickly as possible, and then take care of your credit. Like, sometimes these things are easy to miss and easy to ignore. I know I certainly did it when I first started my marketing agency years ago. And I was so focused on just getting customers and getting my name out there and learning and generating revenue and things like that, that I neglected my credit. I neglected, my entity has been around for a while now. I filed it a long time ago now, but these are the types of things that when you set the foundation correctly, it really sets you up for a lot more success later on down the road. And they're not very difficult things to do. I mean, getting your entity through something like InkFile or LegalZoom, I mean, that'll take you 30 minutes to do, and then you get your EIN number once it's filed. And then, making sure you're not maxing out credit cards, you're managing your debt and taking care of your credit. These things can play a huge role later on down the road when you need things like a business line of credit. Those have been my biggest takeaways out of this so far. Any thoughts on that, or anything else you want to talk about with regards to getting these business lines of credit and setting yourself up for success to get approved?
So not so much on the business lines of credit. There is kind of a business funding timeline that I would like to share with
Oh yeah.
everyone so
Okay. Here
that
we go.
they can get a decent idea of what type of funding they would qualify for based on the tenure of their business. So again, some of the general assumptions. Your business registration has to be up to par. What does that mean? That you have an EIN number, that from a look for whatever state you have registered, you can produce a certificate of good standing, meaning that your entity is reporting properly to them, that they have all of their ducks in a row when it comes to how you are doing business and how you are communicating with your local state. The other thing is that you are producing federal tax filings. You also have an active business account. Even if you have an EIN number and you're producing tax, if you are collecting revenue from a personal bank account, that is going to almost immediately disqualify you. Consistent and predictable gross revenue, you have to work. Obviously, if you're brand new, you aren't going to be anywhere near this number. But for us to be able to open up the echelon of upper tiered financing, we need to start hitting a minimum of $15,000 a month in gross revenue. Once you hit that benchmark, we can start exploring much more complex vehicles that may be a little bit more suitable to your business as opposed to just business credit card stacking. And again, owner, personal credit, anything above a 680 will help to just facilitate the entire process. I'm not saying that we won't be able to get you financing if you're under a 680. I'm just saying if you are below a 680, please do whatever you can starting yesterday to
Right.
correct your credit, and get it into a suitable position where a bank will come in and look at your business profile and not worry about your own personal financial situation and decline your funding request because you personally aren't in a good spot. So if, as a business, if you're in the pre-revenue stage, from the bank's perspective, you are working your brand. You aren't doing much of anything else other than trying to make your presence felt in the marketplace. So they won't be able to extend many types of financing for you outside of credit-based financing. The most popular and best program with regards to that, in my opinion, is the business credit cards. Again, 0% interest. We also have the ability to go out and get you some personal loans. But again, that is on the personal side. We can get you a decent amount of capital to work with, but those will be reporting to your personal credit. So there will be effects from utilization to inquiries. All of that stuff will be showing up on your credit report. Pre-revenue, you also have the ability to go out and try to get some private equity, getting investments from family, friends, associates. You can do that, raise capital that way, and that can help generate, the capital that you need to begin and establish your brand. As a startup, what I'm qualifying as a startup is you going out and purchasing an existing business. From the lender's perspective, you are making refinements and adjustments to an existing business model that has already been proven. So from that startup perspective, again, we can kind of build, and everything that is available in the pre-revenue stage is also available in the startup phase, but we can add into that mix an SBA acquisition loan. They can help you acquire that and buy that business, but you will need at least a 660 credit score. And you also need to have 20 to 25% of the down payment of the acquisition cost of the business available for you to be able to take on that financing term. So again, it's an avenue that we can help you get into a business that is already established, and all you're coming in is buying it out and hopefully making those adjustments to make the revenue, the profits, all of those different margins increase. Once you hit the 6-month mark, you are in the concept development mode from the lender's perspective. So you can now begin to qualify for revenue-based funding. You can now begin to go out and start looking at equipment financing. At the 6-month mark, though, however, keep in mind the equipment financing, you might be asked to put down a down payment. So keep that in mind, where you may not have the ability to come in and buy $25,000 worth of computer equipment and not expect to come out, because again, you're still in that infancy stage from the lender's perspective. So they want to see skin in the game from you before they go in all out and they're taking 100% of the risk.
Right.
Once you're in the 12-month phase, again, you've been around for a little bit, you're tweaking, you're making adjustments as your business is scaling, as it's evolving. At this point, equipment financing might be available to you at 100%. We also have the ability to go out and get an inventory, depending on the type of business that you're running, an inventory line of credit, meaning that we will collateralize your existing inventory and obtain a line of credit for you so that you can go out and acquire either more inventory or get some other business funding or business expense taken care of through that line of credit. We can also take a look at accounts receivable financing. Again, lines of credit are probably the most popular ones, but in order for you to qualify for those, your accounts receivable balance has to be pretty consistent, if not increasing from the time that you registered that business up until the 12 months. If you have dips and valleys in that balance, chances are we're probably not going to be able to get you approved.
Okay.
Once you cross that 18-month mark, now we're able to start taking a look at the business line of credit. Again, there are going to be other factors. Just because you're in business for 18 months does not mean you automatically qualify, but that's when we can really start to explore a traditional revolving line of credit. Let's see how your piece of the puzzle fits into that equation. And then a bank will also start to feel more comfortable extending subordinate debt to you, meaning that the revenue-based funding that you can qualify for back in month 6, chances are you can only get one of those types of loans. Once you cross the 18-month mark, we can start looking at second, third, fourth position loans. And a bank will be a lot more comfortable extending those out to you because you've been in business and you're generating revenue's increasing, profits are increasing. They
Right.
will be more likely to extend that to you. Now, once you hit the 24-month mark, from a bank's perspective, you are proof of concept. Your business has been around, it's been scaling, it's been growing. Now we can start taking a look at SBA loans, which SBA loans, as everybody knows, they're backed by the government. They 9 times out of 10 have the best interest rates, the best terms. And so we can start diving into those vehicles and getting cash injections into your bank account, and then you can go out and invest it as you see fit as a business owner.
That's awesome, man. I love this timeline. That was really cool. Do you think we'd be able to put that, give people access to that?
Yeah,
Put
absolutely.
a link to that
I'll
in the
send that
description.
over to you, and
Yeah,
you can use that, and people can use it as a reference point.
yeah, for
Because
sure.
again, we're trying to get people to understand the lender's perspective and our perspective. When you submit an application to us, we're taking everything that we're talking about, plus a couple of other components, and trying to bring back to you the best financing vehicle that you qualify for at this point in time. Not always does it come out to be what you want. If for whatever reason you're looking at this line of credit and you're like, you know what, Jose, this is the only thing that makes sense for me, we may not be able to get you qualified for that particular vehicle at that point in time. However, we do have the resources. If you're coming up short on credit, or if you're coming up short on revenue, we have the resources to consult our way and grow with you and make sure that you're hitting the benchmarks that the lenders are already looking for.
Right.
I know what that underwriting criteria is. I speak with these lenders on a daily basis. So it only makes sense for you to work with us long term. So that way we mold your piece of the puzzle to fit their equation and get you the type of financing that you're actually looking for.
Right. So the key at this point, guys, is if you're right now looking for a business line of credit, maybe you've applied before, been denied, whatnot. Using something like the timeline that Jose just showed us, really identify where you're at with your business. Do you need to increase revenue? Do you need to increase your credit score? Do you need to file for an entity? Like, do you need to get that registered? Do you need to do all of them? You need to identify where you're at right now and start to work towards building those things up, getting those things done. The faster you do that, the faster you get the line of credit, and then also identify where are you in the timeline. And I really like that timeline, because it not only shows you like where you're at in business, but what is available, what are the best options for financing at these different stages of your business development and how long you've been in business. So I really like that. So great training. That was really, really informative, Jose. Really appreciate it. Any final thoughts? Anything else that you want to cover before we wrap
Uh,
up?
yeah, no, there really isn't. I really hope that people can take everything that we just dissected and apply it to their knowledge, and maybe even more important, their expectations. when it comes to trying to get financing for your business. I completely understand, and as a business owner myself, I can sympathize with a particular vehicle being what you need at this point in time. But again, the lender unfortunately is the end all be all to getting that extended to you. And if you don't fit their criteria, unfortunately, they're just not going to they're not going to bystand their guidelines and take on more risk for their stockholders for your enjoyment for unfortunately that's just not the way it works. So keep in mind there are certain benchmarks you have to hit: tenure, personal credit, and revenue. If you guys need help with the credit or the tenure part, or not the tenure part, the revenue part, please reach out to me. That is what we are here for. Unfortunately, if you're a business owner and you have to rely on business-based revenue because your credit is just absolutely shot, instead of feeling in the dark or being put in a corner, let us help you make a plan for those funds. We take on clients in that position all the time. We fix their credit for free. We give them consulting on revenue and profits. So that way we grow with you. And in 6 months' time, 9 months' time, you're in a completely different picture and you're able to get much better terms, if not qualify for the type of financing you were seeking in the first place.
That's awesome. I love it. Yeah, guys, make sure you take advantage of that. Again, so I'll just throw it up on the screen here really quick, but we're going to have it in the description as well. If you need help getting financing, or if you need help with either aspect of your business in order to get financing, like Jose just said, credit, revenue, things like that, make sure you take advantage of the free consultation. We'll have that in the description. So as always, Jose, really appreciate your time. I learned something new every single time we do this. And I'm confident the audience does as well. A ton of value, ton of knowledge. So really appreciate it. And I look forward to the next one.
Yeah, bro, I appreciate you. Thank you again for the opportunity. And I look forward to the next one.
All right. Sounds good. We'll talk soon.
Talk soon, bro.